Yeah, good morning, everyone. At least those that are here in the same time zone in this part of the world, probably a GMT +8 +7, and probably afternoon or maybe evening from different parts of the world. Yeah, thank you very much for having us here today. As what Rebecca shared is a bit unique. Usually we do it at night, but now it's like 10 in the morning here. So, okay. So yeah, maybe what we can do is that I'll just have about 90 minutes of we got to do all the talks and everything. And I'll be asking some questions where we have some guests here. So in order to let you know who they are, these are the few guys that have their video on. I will start off with Peter. Can you raise your hand? Okay, that's Peter. Okay, and Benny. Okay, and then there's Max. Okay, yeah, we are going around by the age. So we started off with Benny, and then you end at me. Okay, I'm the younger one. Okay, so yeah, okay, it's a Monday. Sorry, it's a morning. So yeah, okay, yeah. First and foremost, as what Rebecca mentioned, the best is probably you try to mute on yourself and accept the speakers. So because doing a virtual panelist is very different from physical. I mean, physical you can always interact here and there directly. But when you're on the virtual, sometimes because of internet lagging here and there, so things may be a bit slow and stuff like that. So do be a bit more forgiving about that. So before we start, I'll just kick off with probably a short introduction of everybody here. Maybe take a while for everybody to just do a short intro. Perhaps we can start off with the youngest one. Peter, maybe you want to do a short intro of yourself.
Good morning, everybody. I'm Peter Yu from Hong Kong, co-founder with Wai Long for the Screens Guru. We are a artist-centric fine art marketplace for NFT. And then we will try to see if we can do things for the artists, collectors, and the creators in the coming future with our new NFT technologies.
Okay, thank you, Peter. Yeah, the next younger one, Benny.
Hey, good morning, guys. My name is Benny and I'm from Digital Nomad Labs. We are more focused on helping the blockchain space to get regulated and staying compliant.
Okay, thank you, Benny. Yeah, how about Max yourself?
Thank you, Paddy. Hey, good morning, everyone. My name is Max from SCMI Group. We are a Singapore-based consulting firm for supply chain management. So anything related to international transportation and logistics, especially now in blockchain applications, we'll be happy to help. Thank you.
Okay, great. Yeah, so let's kickstart. So, okay, here's the thing, guys. Blockchain is not new today. Blockchain has been, well, in fact, a couple of years ago, when it first came into the scene, lots of people thought that it's a new technology. Lots of people thought that it's a new word. But according to a lot of industry experts, is that it's just a form, shape, and size probably a bit different. So perhaps we can actually kick off with how does blockchain actually works in the industry that you guys are in. Max, I'm more interested to know, I mean, not that I'm not interested in the other two guys, but I'm more interested in what you're doing now, especially for logistics. Because a couple of years ago when logistics, started using blockchain, perhaps you can share with us what is the relationship between blockchain and logistics itself, or even supply chain?
Sure, Paddy, happy to. First, before you talk about blockchain, I'd just like to maybe describe supply chain and there are different industries. So basically for your business, you will have suppliers, what we call the upstream, and the customers, what we call the downstream. So connecting these three parties, actually, you and your suppliers will be what we call the replenishment cycle, right? And your relationship with the customers will be the fulfillment cycle. Now, in these two cycles, there will always be three flows. The materials flow, that's how the physical items move across borders from origin to destination. And also the second will be the information flow. That is the transfer of information from one system to the other. Like for example, you may be using SAP and then sending information to another customer who is using Oracle, right? And in between, the logistics service providers, like where I used to work, we use warehouse management system, customer fulfillment order systems. And finally, the third flow is financial flow. So if you look at all these three flows, materials, information, and financial flows, now blockchain actually, through the distributed ledger technology offers a very innovative and probably game-changing way of how we disseminate information. For those of you who work in the office environment before, you know that a lot of the information is actually very centralized in silos. And what happened is that the clerical staff will put in information. And when your customers want to check something, they will have to call the customer service, send an email. And a lot of this information also are not so-called totally immutable, right? So what this blockchain offers is actually an opportunity for the information to be decentralized and shared in a more efficient manner, right? For a lot of use cases, like for example, how do I prove my certain product is organic, right? And how to improve the operational efficiency in the area of, for example, trade finance, where there's a lot of paperwork and the transfer of ownership is also something that's not decided when the items are shipped from the factory. So there's a way of looking how blockchain can actually help supply chain in managing these three flows.
Oh, okay. So Max, it's interesting that I mean, with you yourself being in this industry for quite a while, you feel that this blockchain will be able to help in the few things that you mentioned earlier. But do you yourself see as a major impact? That means that can the supply chain or even the logistics do without blockchain? I mean, whatever said and done, logistics, supply chains, and whole bunch of all this with end-to-end flow and all this, it had been around for so many years. Does it improve in terms of the efficiency? Does it improve in terms of the efficiency and stuff like that? I mean, efficiency, effectiveness, sorry.
That's a great question, Paddy. I will have to answer that probably in a different time buckets. In the short term, the answer is very uncertain. Frankly speaking, how many Singapore-based companies or ASEAN-based companies, for that matter, really use blockchain? Maybe there's a lot of companies use instances in China, for example. But I would say that we don't have statistics to really say what is the kind of improvement, right? Except for some trials and experiments, mainly led by MNCs, for example, IBM. Okay, so in the short term, it's actually still in a very new awareness stage. But in the long term, as more and more companies get comfortable with the idea of blockchain, they're familiar with this technology, and there are more gurus like Peter and Benny here, to really operationalize the technology into real use cases, right? For example, in cold chain, then we would have a definite impact on the supply chain management. At present, what I can say is that don't confuse blockchain with database, because a lot of the information flow, for example, could be handled by databases, right? And specialized logistics management systems. So if you ask immediate, do we need to jump into blockchain? If your company's size and the scope is actually limited, let's say you are just doing local deliveries and there's very few touch points, probably you do not really need a blockchain. Just bear in mind, developing and running a blockchain is pretty expensive. There are three cost factors: the number of nodes, the transaction frequency, and also the file storage size. So it is not really something palatable for the small, medium enterprises. But if you are working in, let's say, a multinational corporations, where you deal with many different stakeholders, right? Many stakeholders means there'll be many nodes. And second thing is, you have a lot of transactions. Like you need to send a letter of credit, a bill of lading to many different parties, which means transaction frequency. And you want a way to quickly share this information and make sure that information is immutable, right? It's not open to tampering. Like for example, reading data on a sensor that monitors the temperature. Then it is probably a very good use case for at least experimenting with blockchain.
I see. Okay, that's a very, I mean, it's a what you explained it in a very layman term. I think that's easier to understand. Sometimes when you read about blockchain, my God, man, it's like you go into quantum physics, all this kind of stuff, which is pretty deep. So okay,
so every day. Every day you're learning new things.
I agree with you. So talking about this blockchain, of course, inevitably it will come back to crypto. I think this is the question that I want to ask Benny. I saw Benny drinking a couple of times from a cup of water. Either he's nervous or he's probably really thirsty. Okay. Okay, so Benny, from the introductions that this Rebecca did, and then you yourself introduced yourself more on the your company Digital Nomad Labs itself. So I want to ask you, in terms of when blockchain came into the scene, well, a lot of people get very confused about blockchain is crypto is blockchain, and then after that you got your main coin, you got your altcoin, you got a whole bunch of all these. Perhaps you can share with us a bit, like, what is the relationship that you see between blockchain and crypto?
Okay, so when it first started, blockchain was made famous by Bitcoin. So it is something that everybody knows by now, a Bitcoin. So the first thing, when you talk about blockchain, the first thing they think about is Bitcoin. But the actual fact is, you can actually have real world applications on the blockchain without crypto. So what am I saying? Crypto cannot function without blockchain, but the blockchain can function without the crypto.
So that means you're saying that both of them don't have to be mutually inclusive, but they can be mutually exclusive. Are you implying that?
Yes.
Okay, so but the problem here is that in terms of the crypto, there are a lot of you got your Bitcoin, you got Ether, and a whole bunch of all these. But then there are also the smaller, what we know as the altcoin. So question here would be, what are the main difference between both of these? Is it in terms of the technical, or is it in terms of the usage, the case studies, and stuff like that?
Okay, so this is happening because when Satoshi wrote the very first white paper, and after it was in the production stages, there were other people who felt that things certain technical aspects shouldn't be done in a certain manner. So they started to have conversations on how to improve and how to make it better. That's when all the forks, forks means they split from the main chain and they create something similar to the original, but with upgrades. So then you have Bitcoin Cash, you have Bitcoin. So all these are the forks. This other group of people, they are thinking that they can make it better. That's why they have created a separate chain. Then on top, then on top of that, you have other chains besides Bitcoin, mainly the Ethereum chain, where it's programmable. Okay, Bitcoin is only like a store of value; it can't be programmed. So, in my view, anything that can be programmed is much better than just plain store of value. Bitcoin is like the grandfather, so everybody is buying it, and it's becoming way expensive. I think today it's about 80,000 Singapore dollars.
Yeah, it's Do you see it going up to 100,000 US as what a lot of people are predicting?
Actually, yes. It will become so expensive that the smaller players will just they simply will not be able to afford it. Back in 2010, it was only $200. My first Bitcoin only cost me $200.
So do you still have that Bitcoin?
Unfortunately, no. When it hit 1,000, I already took profit. Yeah, it was 5x. What do you expect?
Okay, yeah. Otherwise, we should meet up to have a cup of coffee, and then I probably can rob you. Okay, thanks, Benny. Okay, so talking about so we started off with Max, talking about blockchain, the usage of blockchain in logistics and everything, and then Benny talked about more on the crypto sides, and as what you mentioned, crypto and blockchain's relationship. So now, I think the one of the most hottest topic now today is about NFT, where still a lot of people are very confused. And of course, naturally, a lot of people actually jump into this OpenSea, OpenSea. You just Google, where they probably do some drawings and then put some pieces of their work and then put it up, so-called digitize it, and then so-called throw a blockchain layer on it, and then try to sell it as a Picasso piece. So now we have Peter. Okay, I can see Peter is standing by. Okay, hi Peter.
Morning.
Morning. So Peter, just want to check with you. In terms of the NFT, as I mentioned, what it has taken over sort of like the crypto world, with all the digital art piece, and then in fact a lot of them are selling through the roof with prices and stuff like that. But what is very curious to a lot of listeners or even viewers is that a piece of art by itself, a physical piece of art by itself, how do you actually convert it into NFT? Is it, how are you going to slice and dice? Because if I were to buy a piece of art, let's say some paintings, okay, that painting probably cost me, say, $1,000. But how do I actually digitize it, and how does NFT actually kicks into this part? Maybe you can share some insights about this.
Well, the operation side is actually quite simple, but I think stepping back a little bit, I think the way we look at NFT is, especially from the fine art sector, we look at that as an operating system that's needed for the artists and the collectors to actually improve the efficiency of the whole ecosystem. For a physical piece of art, that's not difficult. Just like in the real world, a piece of art usually comes with a letter of provenance. And what we do is we basically digitize that and then convert that, or using the word minting that, into an NFT. And then within that NFT, the core part is going to be the smart contract, where we define everything, how the artists want to sell the work, how the artists want to get commission of it, and how the artists want to engage with the collectors. That's basically it. It's not a rocket science, but you mentioned a lot of little people doing little drawings out there, all kind of diversity. It's an interesting phenomenon. I mean, every new generation of art, when a new platform comes on, there's always this question about, is that art? I think that's not the important question. I think the most important question is, do you have any feeling when you see it? If that kicks in some sort of emotion, some sort of infectiousness, I think that's art already. But we need to tackle that question much later for the historian to tell us what is and is not art. I'm not in a position to say that.
But Peter, based on your, historical past, that you've been involved in the art scene for the longest time. So where do you see NFT in the next 5 years? What kind of evolutions will you see, especially where, when NFT came into the market? Well, at least in this part of the world, NFT sort of become very hot the past 1 year. But NFT is not really entirely super new. It's just that, it was probably adopted by a small group of people before you go mainstream. Where do you see this, especially when coming from the art scene that you're in?
Well, we still don't understand the pricing model of the NFT markets. If you ask me right now, I think it's a bubble. I think it's unsubstantiated. Everybody's trying their hands on it. We don't know what's going to happen until maybe in about 12 to 18 months. That's why when we tackle this particular sector, we want to do something more substantial, meaning we want to do fine art instead of like generic things that they have on the market. But then again, although NFT is a platform where you can use to create or curate or even collect arts, but I think NFT goes much beyond that. Go back to the 2014 when the whole system is being launched. It's launched as a content management system where an information layer is being put on top of a artwork, so that artwork have their rights defined and have all the terms defined in terms of how it's trading. The same analogy can be applied to a lot of different things. I'm sure NFT is going to go beyond art very soon. You see a lot of innovative usage of it. It can be used for fundraising. It could be used for ticketing. It could be used for a lot of things. Anything that can benefit from a unique set of decentralized identification and information. So NFT is, to me, is a operating system for the future. Everybody should have an identification somehow, and if they're willing to put to share the information on the chain, which is going to be decentralized and not being able to edit by anyone, that gives it value somehow. It could have an application in healthcare. It could have an application in transportation, and it could even take up a barcode for in the way things are being counted and managed. So it's basically an information layer on top of our life, I would suppose.
Okay, that's interesting take on the NFT. I think it probably takes as any other technology, any other trend, it will probably take a while to be adopted, or sometimes it just come in very, very, very strong. But one question, I think the underlying issue is to open to this to the three speaker here, is that the underlying is probably more on blockchain. If you take a step back, it probably started off with blockchain, and then somehow there are different use case, and somehow there are maybe different usage. Like one of the audience here was talking about that, saying that Bitcoin is a bit too slow and then probably not even scalable, whereas like Ethereum, it's not fast enough, high transfer fee, which is one of the biggest impact that I understand from people who actually go into NFT. Like for example, some of the folks who go into NFT buying stuff, the biggest concern is always too expensive, the fee. Like if you are going to buy yourself $5-10 US dollar of an NFT piece, or the piece, but the transaction fee probably costs you about many times of it, then it doesn't make any sense. So in this case, okay, how will blockchain should be more efficient? Should blockchain actually be adopted by the B2B, by the enterprise, by the corporate first, before it trickle down or before it trigger down to the user to have a mass adoption? I mean, this question is open to the three speakers here.
I think sorry, if I can take it from a sort of like the user's perspective, I think blockchain right now, especially the Ethereum chain, is very, very jammed all the time. And it creates a problem with a lot of layman users when they're not used to waiting around for the process to be done. And that creates a lot of uncertainty. And I look at this as sort of like the web in maybe 1998, 97, where things are still very beta stage and everybody sort of like jump on it with like a crazy mentality. To have this work, we have to have the latency much more improved. I don't know how to do that. I'm not from the technology side, but latency will create a much better UX for everybody.
Okay, Max, you were something to say?
I'd like to chip in. Yeah, sure. Paddy, that's a great question. Actually, this is the fundamental problem which Vitalik Buterin has described as the blockchain trilemma. Basically, you have three performance factors. That is security, scalability in terms of, let's say, transactions per second, and also decentralization. Basically, this trilemma says that you can optimize two, but not three at the same time. So if you have, let's say, proof of work schema like blockchain, Bitcoin blockchain, you will have a pretty decentralized, because everybody is, is decentralized and everybody does proof of work. But you have this performance issue. I think Bitcoin is running around 7 transactions per second compared to Visa, which can run 1,700 transactions per second or even higher. So that's why there's a shift of a proof of stake, right? POS that hopefully can solve this problem. But that, of course, means that the validators will form a more centralized version, right, to make the Ethereum chain run faster. But coming back to the enterprise usage, there's two kinds of blockchain in general. There's the permissioned and the permissionless, right, or the private and the public blockchain. For the company adoption, I think that at the beginning it's probably more sensible to go on a permissioned blockchain, where you have this blockchain, let's say using IBM Hyperledger Fabric or Coda, and these users are actually vetted and pre-qualified before coming into the blockchain. So that will save a lot of effort on the consensus mechanism and helps to run faster, right? Rather than using a proof of work kind of consensus mechanism. So for the company enterprise, I think that's a trend. But over time, if you deal with B2C kind of business, right? Unlike where supply chain, we deal a lot with B2B. But when you go downstream to the retail side, when you deal with B2C, then you may need to have a public blockchain, let's say running on a VeChain. And that kind of public blockchain, they have also developed new consensus mechanism, like VeChain uses proof of authority, right? There's so many different consensus now that it's hard to keep up. Then probably we will see that proof of work blockchain would become maybe more obsolete, right? Where new kind of proof of stake or the delegated, practical, and so on will come into play, and that will encourage more adoption.
Okay, that's interesting take. Benny, do you agree with what Max said, especially pertaining to the question that I asked? Coming from the corporate first before I go into consumer.
In general, yes, but like all things, without the user, the tech is dead. So currently it's all the applications and all the tokens and crypto that you see, they all survive because of the community. So for the corporate to actually make it work, is the corporate can make it work because they have businesses that rely on each other. So it's fairly easier for them. But once you have the public involved, it's altogether a different story. Because when you have transactions that maybe I want to pay $5, but the gas fee is $30-50, how do I do that? It's not it becomes not viable. So if you have a huge transaction, I saw one transaction for 1.35 million transferred over the Ether chain. If you did that traditionally, it will cost you a bomb because the banks charge you by percentage, and it will take you 2 or 3 days before you can actually receive the money. You can see in your bank account, but you can't touch it yet. So when you compare to the traditional way of transferring money, it is actually quite fast. So today I can send money to London and I don't have to worry about the $50 fee and then have to wait 3 or 5 days before it clears. I would say that it might seem slow, but when you compare to the traditional part, it is very fast really.
Okay, that's a very interesting take on between the enterprise and the consumer user. So here's the thing. I mean, same thing. Question to the three of you. It says in terms of blockchain these days, okay, seems that there's a lot of applications that can be used, surrounding these blockchain, as what Max mentioned, from your supply chain, from logistics side, for even like what Benny mentioned. Some of the use case of the Bitcoins, use case of the Ether, and or even Peter talking about NFT and all this. The problem here is that because this is still considered as rather new and it's still evolving. So from a company perspective, okay, as if let's say they are of a certain size, maybe at least they got transactions, revenue based, they probably have about say a couple of million, and they're probably looking to blockchain to increase the efficiency and all this. But the problem here is, which I understand, is a lot of companies, if they want to adopt blockchain, should they actually build in-house, hire a team of people, build it in-house, or should they actually just look for partners that could have already done similar solutions, but at the mercy of them? I mean, these are some of the feedbacks that we understand, at the mercy, because the technology is evolving. So this also means that you're probably very highly dependent on third party. So also from, I think, I mean, any one of you guys here, three of you may want to have an answer or give you some insights. Should they go in-house or should they actually hire external?
Well, it would depend on the business, I should say. For certain businesses where you want to have you don't want all the information to be available to everybody. I mean, like, if let's say the bank has the banks and they started using blockchain and they have and they're using a public chain and all our details are open for everybody to see. We definitely don't want that, correct? So it depends on the business, what they are doing and whether the data can be shared or cannot be shared. So it has a lot of factors before they can actually consider what to use. If you're going in-house, you most probably will be some permission chain where the public is not it most probably have to be hybrid so that some of your data can be seen by the public. You don't want them to see everything, but certain parts of it. That's the whole idea of becoming coming onto the blockchain and getting decentralized, so that like let's say if we do certification for food, so people want to see where the food comes from, point of origin. How the cows or whatever was fed, or was it free range or whatever, this type of things. So it really depends on the business.
I tend to agree with Benny. I think, well, how and the rights to information differs from industry. In our industry, that actually has an extreme high value. Meaning the art industry has always been driven by people. It's a people business. It's the artwork being created by the artists, and then it's submitted to the gallery, and the gallerists look at it, and then like it or not, and then start promoting it. It's a sort of like one-to-one B2C sort of relationship. That has its limitation, and that's why I think in order to actually build sustainable career for artists and to have art collectors building reputable collections, transparency in information as much as available is a great help. And that kind of information might be a bit scary for a lot of people. I mean, if you put an artwork online, everybody knows whether we have sold it or not, and at what price and who brought it. But that sort of information should act as an information layer on top of everything. And then that information layer itself should have its own value. Instead of like just word of mouth and stuff like that, which is not provable, not quantifiable. Going forward, I don't see human-driven, people-driven business of fine art would work. In order to actually expand it to the much wider audience, I think information is the key, the core, and sharing is most important. And also one more thing is, I understand everything starts from an ideal situation where people think of NFT or even crypto as totally decentralized environment. In reality, there has to be some sort of control, some sort of management. I think we are far from where we can decide where that comfortable zone is for everyone. It's good to have experimentation, and it's an exciting technology that we get to play with.
Okay, thanks for the insights. Max, you have something to add?
Eddie, I like to offer a different viewpoint. Regardless of industries or the business nature, based on what I see, I would say that 90% or even more will probably require external assistance. Okay, I see Lionel go. Thanks for your feedback in the chat group. He mentioned about VET and adoption depending on a robust ecosystem. Precisely, you see, why people go on VeChain, for example? Why don't they build it in-house? First, I think there's a shortage of blockchain specialists. And if you hire developers, Benny always tell me that, oh, you hire even a junior developer, it'll be a 5-digit monthly salary, all right? And also there's a shortage of pool of such developers. So that's difficult to really do it all in-house. And the second thing is that you probably can leverage on resources outside, and with ESG funding in Singapore, for example, and even IBM, for example, they do offer a kind of very low-cost model for people to try to do a POC, a proof of concept, at the beginning. Something that's a low reach, right? Doesn't cost more than $100,000. They don't even charge you much unless there's a traveling of international consultants. So I think for most of the 90% of companies, probably is really out of reach for them to do it in-house. And that's why external resources are kind of required.
Okay, that's a very good insight from three of you. I just want to ask another question. It's just like I do agree. If you have a blockchain developer or have someone to be trained up to be a blockchain developer, this is a pretty long journey, because there isn't a, I could say is evolving. So this also means that there's probably a never-ending journey for you to learn and then adopt and everything. So, but if this is the case, question here would be, it's just like when encryption came in, long time ago. For those that's around my age, okay, long time ago, when encryption was actually introduced. In terms of transferring of files, talk about AES 256, talking about data being transferred here, that similar situations then, I draw parallel, was that the last time was that, if you want to be in the so-called security, what we call it cyber security these days, okay, to know more, and there was a shortage during that time, where lots of people was like, hey, you should be a cybersecurity. Why? Because you can learn about AES 256, encryption systems and everything. And then because the ecosystem is being built up, and it seems that a lot of between the G2G, government to government, server to server, and machine to machines, all this, there need to be some form of encryption. So that was then. And my understanding then was that the developers was a highly sought after. Same situation like now, similar situations where should they hire in-house, or should they build from it, or should they actually outsource from it? I think here similarly in blockchain situation it is also, but to build an ecosystem that we are seeing, where blockchain may be the underlying the underlying framework for that, but where do we see what's next in the next 5 years, or in 5 years maybe a bit too far-fetched, maybe in the next 18 to 24 months. I don't know. Looking at the NFT today, a couple of years ago when it first started, everybody was just talking about painting. piece of art, take a photo, draw over it, and then just put it up, and some people can actually make some money. And then now we have blockchain games. We have people, how should I say, investing into bunch of people to play games for you, and then you get the little tokens where you can actually use it to sell, use it to buy. So where do we see blockchain in the next, at least say 24 months? Three of you care to share your views or your prediction?
I think in the next 12 to 18 months, we might even see smaller countries adopting it as an identification system to manage everything of their population, of the flow, of the healthcare possible. I mean, we never expected countries to adopt crypto as the actual currency they use. A legal tender that's happening around with smaller countries, but the logical next step is to manage that flow. And then what better to do than using that whole system to manage the whole national ID database?
Benny, what do you see?
For me, I feel that blockchain it's here to stay. Okay, I'm not talking about crypto. I'm talking about blockchain. It's here to stay, and it's just a matter of time before we find more use case for it. For example, if let's say NFT, everybody is talking about, how is utilized as art and how is being used as a speculative tool, a vehicle. But for me, I could actually have a different use for it. I could actually have let's say I found a wallet that has tainted transactions. I could actually send it a non-transferable NFT with a picture that says, "Hey, this is a tainted wallet." So anybody that looks at his wallet knows, "Hey, this guy, something wrong with his wallet," just because the NFT is there and it's not transferable.
Okay,
So that's another use case for you for NFT. It doesn't have to be art. It doesn't have to be speculative, but it can be used in this manner.
So that means you can actually use it to sabotage each other.
No, not sabotage. I can actually mark a tainted wallet. That means some people might not know, and you will have transactions with that guy because you don't know. But now if I do this, then you will know, hey, this there's something wrong with this guy's wallet. I can't deal with him.
Okay, that's interesting. Max, you have something to say?
offer my personal view is that there's going to be a dipolar outcome for the next 24 months, right, for the blockchain. The public sector will actually intensify efforts to use and adopt blockchain. Like what Peter has mentioned, a very good use case in identification. Was it Estonia or Latvia or Lithuania? One of the countries over there that, I think it's Estonia, right? They claim to be the first, Estonia. Thanks, Ericsson. They claim to be the first country that adopted the blockchain-based identification system. So the private sector, on the other hand, especially cryptocurrency projects, will probably have a crypto winter. As I think a lot of us felt after the 2018, when Bitcoin went from 20,000 to 3,000, right? Now, the main reason for this too is because of funding. Public sector, they always have the large cash pile, right? And they will look at it as how blockchain can actually help to improve public administration, the bureaucracy, right? But for the private blockchain, it depends on funding. And after this third halving, when the crypto goes into winter, okay, it's debatable again. Peter, Benny, and I probably will have differing views, but I still think that there's going to be a top, and the Bitcoin price will come down, and you'll bring down all the altcoins. Right? Some of our guests already putting inquiries about the altcoin pricing and all those things. I think there's going to be a crash again, right? And if we look at the previous halving, the top to bottom is about 6 times down, right? This time I'm not sure because there's a lot of institutional funding coming in. Last time we had ProShares, the Bitcoin futures are not spot futures ETF being launched. So now institutional, maybe they provide a better floor for the Bitcoin prices. But overall, it's still going to affect a lot of blockchain developments that depend on crypto fundraising, ICO, IEO, IDO. So that's why I think there's going to be a dipolar view. But if you plant your seeds, play your cards right into the next halving cycle, then easily, you know, we may see 200,000, 300,000 Bitcoin prices. That's where the next wave of projects like Peter NFT Marketplace can solve, right? The problem is whether you have the ammunition to last for the next 4 years.
Oh, okay. So good insights on this. So question here is, you know, some of you guys been talking about halving and whole bunch of all this. Okay, it can be quite technical to a layman. So I'm just going to ask a couple of questions, you know, to you guys also before we move into the Q&A session. I think a lot of people are actually very interested in terms of on the consumer side. So let's say, for example, if you're a retail trader, okay, you know, I mean, the cycle that we have seen quite a lot. It started off with Bitcoin, you know, Bitcoin wasn't that expensive then. I mean, as if you're comparing to today, it's like 62,000 USD. I mean, you're buying something that you probably can't even see, can't even touch. And then it's worth, let's say if you were to buy a Bitcoin then, and then you've been holding it until today, it's probably going to worth 60,000+. Now the question is that things like forking, F-O-R-K-I-N-G, it's not a vulgar word. Okay, forking, and then after that you talk about, you know, halving and whole bunch of all this, and then at the same time that with the institution coming in and everything, if you are a consumer or if you're a retailer, okay, let's say on the assumption that we have some money here, okay, should I buy or should I not buy Bitcoin today? Anybody? Benny? Max?
I think it depends on your time frame. The first question, anything regarding investment, is the time frame. If you think that the time frame is going to be buy and hold, right, or holderless, what we call, any time is a good time.
Okay, so Max, let me ask you: do you yourself, if you are given $10,000 today or 100,000 today, will you buy Bitcoin today?
I would not buy Bitcoin. I would buy actually the other layer 2 or even the new layer 1 solutions like Solana, those altcoins.
Okay, why? Is it because of the usage? Because of the fundamentals behind it that you see that more enterprise will be adopting it or something like that?
Okay, I must clarify, I'm not really a chartist. So I like Benny. Benny is very good in technical analysis, right? I look at the use case and I'm more on the fundamental side. So you can say the timing is right. You look at the Bitcoin dominance and so on. But for me, actually, it's the use case. And those layer 1 solutions, they are moving to crypto 3.0, right? And actually, the main thing is that they can help to solve the scalability issue, right? Without compromising on the speed, right? Or compromising too much on the decentralization and the security. So I like those projects where they have this very strong use case, right? Especially for enterprise adoption. And my timeline is usually much longer than 1 year. And that's quite, I mean, you can say that that's a very long time frame in cryptos, where I'm in some WhatsApp group and there are people who look at it every second, the price movements, which to me, I think it's very tough. It's a very tough endeavor.
Benny, how about yourself? I understand that you also get involved in all this Bitcoin investment also, right?
Yes, correct. So if I was given or if I was paid in Bitcoin, I would actually keep it and I wouldn't sell it now, because I'm thinking that with all those corporate investors, it will just push the price up higher.
Okay, so that means if you were to come in today at 62,000, let's say assuming you have $10,000 or 100,000, you probably can buy 1.5 piece or just 10% of it, and you most likely hold. And if you were to hold, how long will you be holding?
I most probably won't sell it. I give it to my kids. So, but I do have to mention one thing with the US regulators clamping down on privacy coins or anything that is that wants to stay under the radar from being detected, like the transfers, sharding, any coin that have this type of features. Pretty soon it will, I think it will become there will come a time when it will be, it will be frowned upon to use this type of coins, because you're actually trying to hide your transactions.
Okay, it seems that both yourself and Max are actually looking into. I mean, if you were to invest, you probably be looking on the fundamentals, the usage, and all this. I think that's a pretty rational way of thinking. But we also know that in terms of the crypto investment, a whole bunch of others, sometimes such kind of rationale may not work. It is probably more of a FOMO thingy. So going to Peter, you know, with NFT being so hot now, and it probably will be evolving much more, especially as I do agree with you that NFT is not just about digital arts. A lot of them are utilizations. Some of them I understand is even going to subscriptions, even helping the traditional artists, you know, moving towards into adopting this. So if it's the same for you, 10,000 to 100,000, okay, what will you do? NFT, crypto?
I will do NFT because if some piece of art has its intrinsic value in there, the value is going to be more defendable. We have experienced sudden changes in valuation of crypto quite frequently in the last few months. You see 30% downside, upside correction almost every single fortnight. Agree with the guys that the way we look at it, crypto is a technology, not a financial play. As long as there are usage for it, there's going to be more demand for it, and the pricing will go up. I think if as usage grow, as usage for different industries sort of getting adopted, there's no way this whole thing is going to go down based on the adoption belief of more people using it. Demand supply is simple.
Okay, that's interesting. Okay, so let's say since I'm asking you guys a question, I give you my answer lah. Okay, if I have $10,000 or $100,000, which I hope to, okay, I'm a poor man. Okay, I'll probably just I'll probably split them into 50, 30, 20. 50% are probably going to Bitcoin. Well, so far Bitcoin has made me some money, so I'll probably just put 50,000 or 50% of whatever I have inside there, and then the other 30% I'll probably put into NFT. Because looking at the way NFT is running, but I won't go into OpenSea and just buy whatever I want. I'll probably buy, I'll probably invest in those that has a bit more intrinsic rewards or at least a track records. So most likely everyone that is already an artist, a renowned artist, I'll probably go into that. Then the other 20% I'll probably keep it first. Cash is still king. I'll probably hold it first because that's where, you know, anything comes in from the profit that I make from the other one, I'll probably combine and then buy others. I mean, that's what I will be going towards. Okay, so yeah, okay, there are quite a lot of questions from the audience here. I'm just going to ask a few, and please feel free to to have everybody to answer between Peter, Max, and Benny itself. I may not be able to jump to all the questions, but I want to sort of pick a few because some of them are very similar. Okay, we have a lady, Cindy. She was asking this question: what is your view on mining industry, as the crypto mining, all this, if it's in Singapore? Okay, I mean, so she's actually a development manager from this blockchain AA Mega Mall in the AA blockchain company. Guys, want to take it off? What do you think on the mining industry if it's in Singapore itself?
Sure. Maybe I can take that one first, and Benny and Peter also feel free to chip in. I had experience, actually, the Chinese clients came to us and asked about relocating the crypto mining machine, like Antminer, for example, from China to Singapore. And we did a bit of a study. Singapore is not equipped really. I think one of the comments is that, of course, our electricity prices. Singapore is about 15 cents per kilowatt hour, and I think in China the lowest you can get is even below 5, right? So there's a 3 times difference. And then if you look at the size, right? China, everything they do is very big, like 1,000 Antminer machines. In Singapore, you want to find those places either industrial buildings or data centers, right? Then there's a limitation to the power supply they can hold. So it's really difficult to really find the kind of massive facility to locate all the mining machines in one place. And therefore, I mean, your best bet is look at those data centers and so on. But the cost-wise, right, if you compare to, let's say, Texas in US and so on, even Kazakhstan, I think they have very cheap electricity prices and very cold winter, minus 16 degrees Celsius. Those places or natural factors, weather, electricity price, would mean that it's difficult to compete in Singapore for the mining industry. But of course, maybe Cindy, you know better. Also, we'd like to hear your views as well.
Okay, thanks. Okay, then how about another question? This for iPhone 2, so I'm not quite sure who is it. How can blockchain help developing country? Okay, this is a rather broad question. I'm not quite sure if any of you will want to attempt on this. How will blockchain help a developing country?
We are actually doing something interesting in Cambodia with blockchain and NFT. We're working with a very reputable, long history art organization called Sasa Projects. They run their fundraising campaign on a yearly basis, and obviously every single organization in this part of the world, especially in this part of their sector, would need funding. It's not an easy thing to do. We are working out a way for us to help them raise their operating funding by selling NFT online as a charity auction. The reason I brought that up is because I think if we want to channel the right resources to the right people in this part of the world, transparency is going to be imminent. And if we can do it in a more transparent way, there's so many things the NGOs and the institutions or the government can do. With transparency, people feel safer, and then it might be a more effective way of channeling the right resources to people in need in this part of the world.
But Peter, just to add on to that question, I think one of the biggest challenges for anyone who's into NFT or even okay, for crypto it's actually quite straightforward. I can link my credit card to my wallet to say a Binance, which incidentally is banned here in Singapore for whatever reason. So I can actually link my credit card, bank account, whatever, into say a crypto exchange, and then from there I can say, okay, I want to buy a Bitcoin. Then that's it, and then I do the transactions. Bitcoin stored in my wallet, and then that's it. Okay, but for NFT, is I think one of the most common complaint or feedback is that NFT make it very difficult for people to buy, meaning that I can't really buy in credit card, or at least in the initial stage when they first started. I probably have to buy use my credit cards to buy some other tokens, some other coins, and then I have to make sure that their particular coins or their particular tokens is actually supported, or even, if I were to go to Ether is probably too expensive. If I go to Thundercore is probably cheaper, but I may be captive in the ecosystems or within the NFT marketplace. How can this, where do you see this? Is this something that it sort of deter most people from adopting NFT?
I think the market is showing us their intelligence. There is the traditional way of doing crypto, NFT through cryptos, but we are seeing more and more platforms like ourselves, promoting the use of credit card for the ease of use and everything. Just like Sotheby's just launched their Sotheby's Metaverse, the NFT platform. They allow people to bid for works with their credit card up to $50,000 US. So to get the layman in, we need to do it the layman way. So with credit card and the improvement on the latency of the network, we can see gradual adoption by the common people.
So this, in other words, it also means that I don't really have to know blockchain. Okay, I just know that this is something that I want to invest in. Let's say NFT. I mean, Peter, in your case. So as long as I can use a credit card, I can just come in, buy, and then that's it. That is what you see to get retail to sort of like retail consumer investors to come to do adoption.
Yeah,
is that where you're coming from?
End user doesn't need to know the technology behind it. They should not see it at all. I mean, imagine if all their fulfillment CRM technology is in front of the face of the Amazon customers, they would be totally confused and not knowing what to do. I think the challenge right now is make it simple. That's all. Until further technology enable more seamless usage of digital wallets, we have to hold on for that. We don't know when that's going to happen. I expect very soon, but for the time being, in order to get a normal person, you get to have their normal way of transaction. Okay,
so that means that as long as you have a credit card, which you probably had already done with your eKYC or KYC by your bank, buy it, keep it, and then that's it. But the only challenge is the limit of your credit cards. I think that's all, because NFT can be cheap and very expensive. Okay, we have one of the audience, Liner Go. he asked this question: can we have a view on this metaverse? Some people call it metaverse, some people call it metaverse. Speakers, any feedback on that? What's your view?
Isn't the metaverse the next internet?
Do you guys agree that this may be the next internet? But by the way, if you guys are not quite sure, what does it mean? You can actually just Google it. I'm not going to explain. But there's no right or wrong view in terms of such kind of adoptions of the technology. Okay, Benny, you have something to say?
Yes, with regards to metaverse, it's more like a mixing of it's more like a mixing of real life and the online together. You can actually represent yourself online and interact with other people. So recently we saw Sony invested 20 million into a local company in Singapore that does metaverse. So I'm thinking if Sony is doing it, then it must be the correct direction.
Are you sure?
Well, there are big boys are coming in today saying that crypto is bad. Tomorrow they say Bitcoin is good. And then somehow when they say it's bad, they go in and buy it at the low price. And then after that, they come out and say, hey, it's good. And then they decide at a higher price. So I'm not quite sure about all these big brands.
I think metaverse is actually very interesting for the young kids. Okay, I don't know how many of you got children who play Roblox. If you think about it, this online game is actually a different kind of world for them. And big children, they don't have handphones, smartphones. And they're using Roblox to communicate, like a WhatsApp messenger for adults. So I think this metaverse, the implications are probably profound for the next generation, especially if you think about it, acquiring virtual lands and having your, let's say, elves, orcs, goblins, and you can trade in the secondary market. So that's why kids next time, is no longer going to office, get a job, work, and they can create NFTs and then they get a 6-figure, 7-figure annual income from there. So the implications are very profound. I think that deserves to be another topic, maybe Rebecca and Patty, about metaverse itself. I think this is a very interesting topic.
Yeah, I do see, I've been seeing quite a lot of, well, not for me, but I've been seeing quite a lot of young adults. Actually, the first thing that they buy is actually going into the whole ecosystem of metaverse. I mean, of course, there are a lot of other things. There may be a lot of other virtual products, virtual goods, but surprisingly, they somehow buy low, sell high. It actually applies. And even folks that, I saw kids themselves, they actually build very interesting products virtually, and then they put it out into auction, put it out into marketplace, and then they sell. After they sold it off, they get the credits, and the credits turn into more playtime, more fun time. Well, that was probably more on the kids side, but I do understand that, like for example, Axie Infinity. That's of course another topic by itself. But surprisingly, is when we talk about it, a lot of people actually didn't know that the underlying the technology that may be powering all this may actually be blockchain by itself. I think this is something that a lot of people don't really see the relationship from there. So one question from Erickson is about, what about blockchain as a service, or sorry, blockchain as a solution? Any risk to it? Max, you want to try? I think this is probably more on your forte, or Benny.
I think the BAS, whatever you call it, the greatest risk is probably, I would think that there's actually 3 major risks, right? And I can sum it as RAT. Yeah. R is regulation, A is awareness, and T is technology, right? Now, regulation is one big topic by itself, and now even when you want to raise funds, whether it's a security token or utility token, the Howey's test is actually everything will be under security token. But I'd like to point out specifically on the security risk under the T segment technology, because blockchain itself, especially proof of work, is very hard to attack. So far, there's no official recorded instance of the blockchain or the Bitcoin blockchain being hacked. A lot of the problems actually happen in a centralized exchange. And where there is, let's say, on-ramp to off-ramp, when there's crypto to money transfer, or when there's some data exchange that's outside of the blockchain. So typically, cybersecurity hacks, I see Mike, I don't know whether he's still here, Mike from Cyberbit. There's a lot of tricks like cross-site scripting, cross-site request forgery attacks that can still be employed on the blockchain, especially on that layer outside of the blockchain. So I think that's one of the biggest risks, especially if you handle a lot of monetary transactions, right? And as you know, this is not secured by SDIC. There's no one you can go to and claim, oh, I lost my funds, or maybe you go to Binance or some centralized exchange like it's hacked. But otherwise, it's really difficult to get a recourse because there's no, it's not protected by the government.
Okay, so question, can blockchain be hacked? I mean, I got a direct question that was sent to me. Can blockchain
in principle,
be hacked?
In theory, if you can get 51%, all right, that's the consensus mechanism, you get 51% consensus to a very high power of hash rate. In principle, you can. But in practice, you cannot. The reason is because the hash rate, actually everybody knows, right? If somebody in the blockchain ecosystem sees that, hey, this company from this country is getting a lot of hash power, right? They will be very concerned. And as it goes towards 51%, they will just leave and maybe they'll do mining in other cryptos, right? So in theory, yes. But in practice, actually, the game theory says that it's not likely to happen.
Okay, so is this restricted by, I mean, in the opinion, or perhaps even Benny or Peter, in the opinion, I mean, it's hackable, I said, in real life and all this. Is it because of the existing technology, or could it be, when we actually be able to, the computing power will probably just jump much higher? Do you think this is something that is possible?
If I may, the hacks that occur today or over the last few weeks within the decentralized space called DeFi is due to the what do you call that? It's like, okay, Uniswap is doing very well. I want to make another Uniswap. So some developer copies the code and implements it without going through the code thoroughly. So sometimes there are certain what do you call that? Places where there are gaps in the code where the original creator already patched it, but the guy copying the code didn't patch it. He just took the original code and reused it, and it allows other people that actually know the code very well to manipulate it.
So that means the weakest link and the strongest link is still human. Yes,
correct. It's because the code was not done correctly and they didn't go through it. They just copy and use. So you have a lot of what do you call that? You have a lot of DeFi popping up everywhere, all using in general they're using either what do you call that? Uniswap, Uniswap's code, or they are using Pancake's code. So if you look at it, they are all generally the same. And then when one of them get hacked, they say, "Oh, I'm using Pancake code," but because they didn't go through the thing to take out the options that they didn't want to use, and they left it open, and that's where the problem comes. Other people that know the guy, you're using my code, but you're not using it properly.
So Benny, it seems that you have some experience on that before. So assuming I'm a SME, or maybe I'm a corporation and stuff like that. I want to go into blockchain. Okay, I may not be sure of exactly what to do, how to do, and everything. Can I contact you, type?
Yes, definitely you can. And if in the event that I'm not able to provide the service, I can also tell you where to go.
Okay. So that means that if I want to go into supply chains, or maybe I'm already a 3PL, 4PL, third party, fourth party, and I want to look into this blockchain stuff. So I guess I can actually go to Max, right?
Yes.
Fundamentally, yes.
Technically, no.
Okay, so probably Max will be coming in on the consultancy part, and then Benny will be coming in on the implementation part, I guess.
Yeah, it takes a lot of work to make a real, what do you call it, a real use case to work. It won't just happen easily. If it did, it wouldn't take us so long to have I think in total there are about 50 real world use case today employed in different parts of the world doing different things.
I see.
It took them 7 to 8 years to get it right.
And still figuring out over time also. So one question, Benny, since you're talking about more on the tech side, okay, what would be the main advantages for cross-chain technology? I mean, in terms of the blockchain interoperability. I mean, but perhaps you can sort of like, maybe you can define what is cross-chain to some of our, some of our audience here.
Okay, so cross-chain is, okay, so you have Bitcoin, you have Ether, you have LTC, you have many other chains in the ecosystem, but they all cannot communicate with each other. They are essentially siloed, and they are not able to talk to each other. So what does cross chains mean? Cross chains mean that the ability to have Bitcoin talk to Ether, or Ether talk to LTC, and have the transactions going on. Before, it was not possible. I in fact started to explore this cross-chain issue back in 2016, and I only managed to do it last year. Being able to what do you call that? Send a transaction from BTC to Ether. That it's not easy, but now it can be done. So imagine if you what we can do with a cross-chain environment. I would be able to look at let's say I open my dashboard and I can see all my transactions from all the ecosystems. That means I can see my BTC transaction, my Ether transactions, my ERC20 transactions, my BEP transactions, all in one dashboard. Currently, I should say there are not many around that can do this. That means the ability to view. You would have to open and close many wallets to view all your assets today.
Yep.
But in the near future, you will be able to see all your assets in one portal.
Okay, that also means, okay, the reason I ask is also because I'm also curious about where NFT stands, because I think today's NFT, as what Peter shared just now, it may not just be digital arts. It may actually, becomes more commonly adopted. So Peter, from a layman term, from a layman's point of view, if today NFT is probably just the beginning for a lot of other stuff. In this case, what kind of investment should we as a commoner should actually invest in? Should we be looking into art pieces? Should we be looking into, of course, I know that this is your personal view, but should we actually look into some other utilizations of the NFT besides art itself?
Definitely. Art is only one of the application. And going back to what Benny was saying, we see all this innovation on different chains. And in order to actually get a better use case and wider adoption for them, interoperating capability between chains is only going to drive usage for the key innovations. And through all consolidating of all this innovation, can we flourish the market? Just like imagine, back in the old days, mobile operators work their own proprietary messaging system, everything. It's only once operator can talk to each other, then messaging becomes something important. It's only when iPhone provides an environment where applications being developed and so easily, that then that whole magic happens. I think having different innovation on different chain used by different people will improve the environment, the technology side, and also the usage side. And for the layman, I first advise is try to get a digital wallet, just to have an experience. It's a bit scary. It's like using Windows 3.1 right now, where all the hacks and things are not efficient, but it's going to improve. But roll up your shirts, sleeves, get your hands dirty, get a digital wallet, browse around, see whatever fancy you. Don't buy too expensive. Start from very, very minor things that you can collect and see where it goes. It's a community. You can actually go around. It's like, if you look at it in a positive way, OpenSea is the biggest gallery in the world. There's so much there. It's bigger than any museum out there. So get a digital wallet, browse around, see if anything you like. Maybe try some, buy some. I don't know.
Okay, I saw a question that quite related to what we are now talking about. I think Johnny was saying that, I think this is probably in reference to just how we were saying that it's a bit complicated for user to buy, if they don't have the relevant coins or tokens. So he mentioned that, normally NFT is built on wallet. Examples, you've got your Ether, BNB, Solana, and, if they can get the coins from the exchange and the transfer over, should not be too hard to buy. Am I right to say? Peter, you have any view on this? You're on mute.
Can you repeat the question? Sorry, I was.
Okay. Yeah. Okay. I was saying that Johnny actually mentioned, I think this is in reference to just how the earlier topic that we were talking about, NFT being very difficult or challenging for commoner to buy, especially if they don't have a wallet or they don't understand all this. So he mentioned that if you can, NFT is built on wallet. So if they have, or if they were to buy some coins in the exchange, they should be able to transfer over to buy. Am I right to say this? So that was his question. So let me rephrase it, Peter. My understanding is that some of the buyers, or especially for art pieces, I know this is your domain, they are probably someone who don't even touch on Ether, crypto, and stuff like that. Okay, so do you see a lot? Is it more predominantly in the art scenes, or do you see this in many other industries that you're on in NFT?
It's a very poor UX for now. I am just curious whether there are going to be service provider out there developing business, helping people like what you call layman to actually manage and buy all these arts. There could be agents that act sort of like in between as a service provider to navigate all the technology and latency.
So this is something that you are also doing, right? Because I understand that, in the earlier discussion that I had with you was that there are artists who like, okay, hey, Peter, I have some art pieces. Art pieces can be digital, can be, your physical. How do I get into NFT? Maybe you can share a bit of how do you do that? Especially the part where a lot of people get very confused about minting. So what the hell is minting in terms of NFT space?
Okay, stepping back a bit. For me as an artist, if I was one, to create an artwork, of course, it's great out of my love. But then again, I need to eat. So somehow that artwork needs to be able to monetize somewhere. We took up the approach of the intellectual property management side of things, where we see a piece of art would have different types of rights. And if they set it up properly, they can monetize from it the way they want. And the whole process of turning a piece of digital JPEG into a NFT is called minting. And the core part of it is called smart contract. And what I was just saying, all those like way of trading, how the artist wants to define their rights, all this can be implemented with the smart contract. So on layman terms, you have something to sell, you show us, we look at it, we'll help you create all the rights for it, and then help you probably understand a bit more in terms of how that can be monetized. Of course, it's the artist's choice of doing whatever they want. We're just showing them a buffet of features and functionalities. That being said, I think a lot of artists might be still a little bit less tech savvy than they need to be on the NFT world. So we are providing a lot of hand-holding and services and consultancy for the artists to start building their career on NFT.
Thanks. Okay, so if I ever an artist, I'll look for you, Peter. Okay.
Everyone is an artist.
Okay, so guys, I understand that we left about 10 minutes. I got a couple of questions. I got some direct question actually, but I just got to ask, to the three of you. And by the way, if anybody have any more questions, just feel free to post it also. Yeah, so here's the thing. We've been talking about blockchain. I mean, I know the topic today is about blockchain and stuff like that. So the question here will always be, if you are startups, I know that there's a lot of startups that actually started moving into adoptions of blockchain. But blockchain itself is actually very wide. It can be used by many industries and a whole bunch of all this. I know like logistics is an industry itself, supply chain is an industry itself. So if you are, if you are a company, you're a business owners that you want to adopt, then naturally you will have to look for the service providers that can, I mean, if it's a third party. But however, okay, if you're someone who actually is still studying, whether are you in secondary school, in polytechnics, in universities and everything, okay, I already embarked myself into blockchain, learning about blockchain and everything. If it's on a career path, what would you recommend? What kind of a blockchain should I actually adopt? Should I keep myself open, or should I actually go down a bit more specifically and deep dive a bit more, where a certain industry that in your view will be adopting blockchain, and that also keeps my career in line?
A profound question. I think if you're talking about a student, right, looking for career, blockchain may not be the priority. And I think a good starting point is actually at least have a crypto wallet. I like crypto.com wallet because I think the UI UX is fantastic compared to other CX. Start from there and play around with the coins, trading, read the white papers. Because if you want to use blockchain as a criteria for deciding your career, probably may end up disappointed because so much is happening now, and there's so much uncertainties going on. So I mean, I'm surprised by there's people who actually don't have crypto wallet, and I think that is a good way to learn about blockchain as a starting point. Thanks.
Benny, you have something to say?
Yes, I should. If somebody was interested in starting a journey in blockchain, I would suggest that they inspect which part of the chain that they are actually interested in, because you have the developers and you have the business side. So as a developer, you need to know both what can actually work and what won't. So you have to learn the fundamentals and the technicals as a developer. But if you are just interested in doing business with blockchain, then you should take a course with I think IBS. They will give you a very high overview of what blockchain is and how it can be applied, to traditional businesses. Then you can become a blockchain consultant. So it really depends on which role you want to play. Do you want to be a developer, or you just want to be able to consult? So there's two different paths. Okay. So, but as a developer, you need to know both.
Okay. I think Benny, Cindy may need your help to give the details of the course name. I think she's interested in that. Okay. Max, thanks for putting up onto the chat box. Okay. So so this is about blockchain itself. So interestingly, let's say if I'm a company itself, so going back to these big questions, I know there's no answer to it. Hire in-house or get a third party. To some of the folks here who are not from Singapore, I think in Singapore we are a small country, so we always face this big issue of manpower. And my understanding is that a lot of companies actually go into hiring third party, which some of the folks are actually overseas rather than based here in Singapore, because there's a huge shortage of technical or engineers or even programmers in Singapore by and large. Okay, but so that means if you're a company itself looking into adopting a blockchain solution or blockchain as a solution or blockchain as a service, I think this is the part that we probably really have to go in a bit deeper. I think hiring is always a big problem and it's very expensive. But if you were to look into outsourcing, maybe that would be good. But I think the starting point would be good if to at least, as what Benny said, to understand what is blockchain first. to have a feel. And maybe as what Max also talk about open a wallet, dabble with it, buy a bit of this and that on NFT as what suggested by Peter. I think that will give a sort of an overview of what is blockchain and then able to keep track of it. Otherwise, it's going to be quite a tough journey when things evolve so fast. Okay, we are left with 5 minutes. I have a question from one of the audience here. This is more towards Peter. How is NFT affected by cross-border IP rights? How is NFT affected by cross-border IP rights?
It's not an ideal situation, and also I don't think enough effort has been put into defining the rights on NFT. All the rights are so far defined for physical artworks and digital artworks that has a physical jurisdiction. I think we need to spend more research and effort into consolidating what's out there and maybe work out the lowest common denominator to start with. With that, we can always build on top of it. But I think resolving that is going to be, or actually developing that for the NFT space would be the most imminent thing to do.
Okay, so hope that iPhone 2, you get your answer. So one question, this for myself, Peter. Okay, let's say there's a physical art piece, and this art piece has been digitized into an NFT. Okay, I invested. Maybe this whole piece is let's say this whole piece is $100,000. Okay, I came in, I bought $10 of it. Okay, and somehow, somewhere, that physical piece got destroyed in a fire. Okay, what will happen to the NFT that I own?
Well, just like when you buy a house, you get a deed. When your house got burned down, you lost that house, and the deed becomes useless. It's as simple as that.
So, in other words, it will be worthless.
It will be worthless unless it's a conceptual piece where the artist require the art piece to be destroyed as a concept. Then that will have an intrinsic value of the concept. Otherwise, if you just burn down a house, you burn down a house.
Okay, so that means okay, if I happen to be an artist, okay, I'm an unknown artist, nobody knows me. I just draw a couple of pictures, and then I put it on the NFT, and somehow, somewhere, it got popular, okay, and I passed away, okay, I died, and that pieces is no more with me, or nobody actually knows exactly where is that pieces, because that pieces can be a digital copy, not a physical copy. What does that mean for NFT?
What does it mean for NFT?
Yeah, that means I actually drew it on a Photoshop on a computer, and then I put it up into a marketplace, and then I sold it off as an NFT. So that's a digital copy itself, correct? So you mentioned about that having a physical copies with a deeds and everything. So that physical copy, which is the original copy, I put it into my computer, and then somehow, somewhere, I passed away, my computer was sold, stuff like that. So what happened to the owners who owns the NFT?
Just sort of like stepping back a little bit. In the NFT world, when you created, when the original work is physical and then you digitize it, if your intention is to actually sell that digital edition of the physical work, then nothing's affected. But if the digital scan of the work is actually put up online as a reference or as a preview, then the core of the matter is still going to be that physical piece. Then the house burned down analogy still applies. But if the digital version is actually a separate thing where you create it just for NFT, then things goes on.
Oh, okay. So this also means that, okay, it's very interesting. A couple of questions, similar questions. So this means that I drew a photo of, I drew an image of an item. Okay, I NFT it, and then this digital copy, I just call it version 1. Okay, so if I lost it, whatever, that applies to what you said. So if I were to enhance it and then I sell another version of it, so previously it was colored, and now I just change it into black and white. Okay, and then I sell it another copy. So I literally have two versions, two different colors, and then do they override each other in the NFT world?
What you just described there is actually creating a new piece of artwork, because by altering or adding anything to an original one, you essentially create a new piece, and then you have two pieces there already.
So that means if this is my original one, I I enhance it. So the original one is gone, but the NFT version is out. And then this new version, I put it out into NFT. So theoretically, in the world, there are actually two versions of it, even though my original copy has been enhanced.
It's like, yeah, agree. That's the way
Okay.
it works.
Paddy, if I may,
Yeah.
with regards to your previous question about when Peter described it as a house burning down, for me, I think that the value, let's say if your NFT is a copy of the in a way it's a copy of the original physical artwork. If the physical artwork was destroyed, okay, I should think that the NFT now has a more what do you call that? A more has got more value to it because it is no longer available anymore. You won't be able to buy it again. So I should say that if the original got destroyed, your NFT will increase in value.
But that is provided that someone wants to buy it. Otherwise, you own, right?
No. I mean, if you keep it for some time, right, and if the artist was famous, I'm sure somebody will be looking for it. He can't buy it anymore. Only you have the one that is digitally signed and certified as the real copy of the original.
I see. Okay,
I should think that it would increase in value.
Well,
It's like artists dying,
The market will tell us.
Yeah.
Okay. So the ways are either you bet on someone that hopefully he is to exist, and hopefully the price goes up. Just kidding. I mean, okay. Come to 11:30 already. 11:32, in fact. So thank you very much for everybody who take the time to especially on the Wednesday morning. Thank you, Benny and Max, and also Peter, for sharing the details with us and your insights also. And also to the audience, I know it's a bit 90 minutes already. Thank you very much for everyone who attended. And if, let's say, for example, if you need to contact any of the folks here, please take a look at your chat box. There are actually some information on the LinkedIn to Max, Peter, and also Benny. Please feel free to add them, and then you can take your conversations one-to-one with them. Okay, so without further delay, I shall pass this over back to Rebecca.
Hey y'all, thank you so much. Sorry. Moment.
Rebecca, I think your camera is she's probably eating lunch now.
No, okay. So yeah, I've been listening attentively for all the insights over here. But yeah, thank you so much for sharing, everyone, especially the experts over here, as well as good questions coming from Paddy. So let me share screen. Okay, because this is only 1.5 hours and it's very short to answer all the questions that we have on the ground. Okay, so if you wish to connect with us, okay, you can simply just refer to the links in the chat box, or you can just simply scan the QR code over here. So for more updates, if you want to check out like Cindy yourself, if you want to like find out more courses or even upcoming events like such, you can actually connect with me on LinkedIn, or you can just simply like PM us your, just drop your email address in the chat box and we will follow up from there. And then for the rest who wants to like find out more about NFT, blockchain, or even cryptocurrency, even like Max shared some courses on the blockchain, you can actually connect with him. Or if you have more like personal questions on the technical sides, on execution side, that you need fast and quick answers, right? You can actually book a session with each of the experts over here to get your questions answered. All right. So last but not least, okay, we are now having this like free trial for people who just sign up with us on Xpreneur.com. So what do you get out of this like premium access? First thing is definitely the replay. Okay, for each account created, you'll get access to all replays as such. So even if you miss out our past events, you can still catch our replay. And secondly, you can also find out the insights on from our experts like Benny, Max, Paddy, or even Peter himself. Okay, so all of these like things you see over here, you will be you will have access to this if you sign up with us, and we will immediately give you 1 month access to all these items. Also, for future updates, we will be blasting updates every now and then to keep you guys posted on what's up and coming. Okay, so thank you so much for spending the time with us today. I know it's about lunchtime. I guess everyone is preparing for lunch after a good session, right? Okay, so thank you so much, Paddy, Max, Peter, as well as Benny, and as well as the audience.
Okay, thank you very much,
being here
guys.
together with us today. Bye-bye.
Thank you.